Hey everybody, Doug Reynolds here, your Sacramento Area Realtor, and this is your monthly update for the end of May and the beginning of June. So the market is continuing to be kind of crazy here. If you've been watching my regular monthly updates, we've really shifted here. So let's get into the stats for April. Once again, the price went up. It went up about 2%. It went up from $165,900 to $169,000. So the median has gone up 3 consecutive months now. If you remember back in January, we were at $160,000. It went up in February, March, it's gone up again in April. So 3 straight months, we're up to $169 as the median. It doesn't look like things are going to stop here. I expect more of the same for the months to come. It's basically a case of supply and demand right now. We're in Sacramento, we're at the lowest amount of inventory of homes for sale on record. The inventory went down again in April, and we're below 1 month of inventory. We're at 0.9 months of inventory. What that means is if no new homes came on the market at the rate that we're selling the houses, we'd be out of homes to sell in less than a month. That's how little inventory we have and how many sales are going through. What's considered a balanced market is between about 4 and 6 months of inventory, and that would have a relative balance between the buyers and the sellers. So you can see how we've really shifted extreme to low inventory or below 1 month of inventory. The amount of sales, they stayed basically flat. There's a little bit more than 1,600 sales for the county, and to be honest with you, because of so much demand that there is, we actually would sell more homes if there was a little bit more inventory. But the demand is high, the inventory is just low, so the amount of sales are staying about the same. One thing that's very interesting is 32% of the sales that happened in April were cash sales. There is a lot of cash that's come out of the woodwork from investors, buyers, people that were just sitting on cash, watching the market. Now that they've seen things have bottomed out, they're bringing that cash out and they're buying up properties. They're buying up rental properties, single-family homes, duplexes, fourplexes, you name it. 32% of our purchases were cash in April. So I want to just talk about, I've talked about this in the past, I'm still saying we're at a price-sensitive seller's market. And what that means is that if you price the home just right, you're going to get multiple offers right away. It's going to sell above the list price, and it's going to go extremely fast with tons of interest and offers on it. Let me give you 2 quick stories of both sides of that. I just listed a property in Roseville last week. The sellers, I explained to them the market, what was going on. They say, okay, we want to list it. We want to list it correctly so that we get a lot of attention, a lot of action on it. So we listed the property at $245. Within 5 days, I had 11 offers on the property. We ended up accepting an offer that was well above the list price. Most of the offers were quite a bit above the list price, and we were able to get it sold with a lot of attraction on it, a lot of demand for it, a lot of attention, and we got it sold real well because we marketed it well and we priced it right. But on the other extreme, let me give you another example. A property recently came up in College Greens, a neighborhood that I live in and specialize in, and it's a bank-owned property, and the bank listed it above market value. It's probably worth between maybe $240,000, $245,000, and they listed it at $20,000 above that, $25,000 above that. So I've got a client that's real interested in the property, and we wrote the offer at fair market value for it. And the bank is insisting on staying very close to where they listed the property. And I checked in with the listing agent for the bank, and after a week, we were the only offer that they had. So that's in a total extreme, as you can see, of just, if you list the property too high in this market, it still has the opportunity to sit there until that bank gets realistic, brings it down to market value. Then they're going to get the attention, they're going to get the traction, they'll probably have multiple offers on it when they do lower it, if they do lower it drastically enough. But they may end up selling it for less in the long run than if they had just priced right from the start and marketed it well. So it's still price-sensitive seller's market, meaning if you're a seller out there, make sure you get the house marketed very well by the agent that you choose, and make sure you price it right. Make sure you price it aggressively, and that's going to get it sold for you right away with lots of offers. if you're a buyer out there, I know it's tough, just keep with it, keep writing the strongest, cleanest offers that you possibly can, and just stay with it. Sellers, price it right, market it well, and you'll be good to go. So feel free to connect with me, follow my YouTube, you can subscribe up at the top of the page, like my business page, Reynolds Real Estate on Facebook, and you can also follow my blogs as well. So hope everyone has a great month and clear skies.